Gabi Zodik, welcome to Non-Fungible Human. I'm super excited to be chatting with you today. Gabi is the Director of Blockchain and Web3 at IBM Research, as well as the Department Group Manager of the Blockchain and AI Technologies Department at IBM Research. And I'm personally always super excited to chat with someone like you who has a really, high level view of what is being developed in the space that we're speaking about, what is emerging, and how it's impacting the kind of various sectors that we all work in. As you know, I personally work in healthcare. My first question to you will be, what does your day-to-day look like in terms of your roles and responsibilities? And we'll start there.
So it's almost like there is a day and an afternoon night job. So I have a local team that, as the title said, is active these days primarily around various AI activities, technologies, all the way from building a foundational model stack or being part of that team. And a big focus around how to apply AI technologies into automation space, business automation space. We can elaborate more on that. And the team working really more on distributed systems technologies. Nowadays, a lot of that is done for blockchain and more specifically around the central bank digital currency use case and domain. So that's kind of my local team responsibility. And globally, I have the responsibility jointly with Eli Andrlaki from Zurich for the entire research activities in this space of blockchain, Web3. And there as well, the focus is around digital identities, central bank digital currency as the primary use cases where we're investing our time and building the technology to enable those use cases.
Thanks for sharing that. We will get into each one of those things, hopefully just a little. Each one of these episodes that I've done, we have kind of new listeners and even some old listeners that may need some brushing up on terminology. And there's a lot of terms that we use when we talk about these technologies that we just assume everyone knows. As an expert, could you define some of these basic terms? So one of the things that comes up to me is like tokenization. There's public and private blockchains. There's a few other terms that you may probably in your day-to-day see misused. If you could kind of give us some basic definitions of what these are.
Okay, yeah, let me try to make some order. So in general, blockchain from a technology point of view is sort of a combination of a lot of two disciplines, I would say, in computer science, two primarily one. One is around cryptographic primitives, crypto in general, and distributed systems. These disciplines existed for tens of years. We've built various systems, middleware systems. And what happened is that one smart guy put these things together and built one specific network, the Bitcoin network. And he called this technology the blockchain network. And I think the realization that we had in IBM as well as others was that this is a more general concept. The fact that we put together these two disciplines accelerates the development of distributed applications. So it's not like we didn't have systems. We did. So in the past, not in the past, even in the present, we still use, for instance, Java Enterprise Edition, J2E applications. So we have products such as WebSphere and so on. They are also allowing us to build distributed application, enterprise distributed applications. They run in clusters and so on and so forth. But this blockchain kind of brought us, I would say, a whole new way to further decentralize and build distributed application. And the main value, I would say, is the fact that it creates some trust among entities, different companies who want to do some business together. So today, if they want to do some or have some business process in place, there are multiple issues. Usually it's semi-automatic in the sense that there is reconciliation problems, dispute resolutions, because each and every company manages the books in their own systems. And there is some transaction that happens, some business logic, some business process among those companies. If it's too maybe it's a little bit simpler to reconcile and resolve disputes. But when you have a party of, I don't know, half a dozen companies come together who want to run a distributed business process, it becomes a challenge. Now, it's not like we didn't have the academic background to build and solve such problems. Yes. But if you try to solve that problem, you end up building something very similar to a blockchain system, because that's really what blockchain system solves, with a lot of crypto in it, so that there is no repudiation, there is provenance, you know who initiated the transaction, who signed it. But at the same time, you have this ledger, this concept that really creates the transparency, in the sense that everyone can see what transaction happened, who initiated it, and so on. Again, within limits, because depending on the system, you don't necessarily want to disclose everything there, but the transparency creates the trust. There is no more disputes, because this is what happened, this is what we all agreed. We ran a distributed algorithm, a consensus algorithm. We agreed that these were the transactions, and we wrote them down, and the transparency creates this clarity and the single point of trust among these companies. So it's really about building trust and enabling distributed businesses to exist. There is a confusion oftentimes between all the crypto companies and blockchain terminology. And as I said earlier, they came from the one thing, from Bitcoin. The technology there was strongly coupled, because it wasn't generic in that sense, with the cryptocurrency, with Bitcoin. And up till today, I assume that many people still find it hard to distinguish between the generic technology and cryptocurrencies that are based on the technology. And as an evolution of that, we have today a world with thousands of cryptocurrencies that are running on primarily, I would say, public permissionless networks. And you ask me about the differences, because that's also sometimes confusing. So one of the directions, or most of the industry in the crypto space, is based on public permissionless networks. What does it mean? It means that the network is running in the open. Everyone can join the network to run transactions, meaning I want to buy Bitcoin, I can run and ask to buy Bitcoin or sell Bitcoin. I also can join the network to be one of the, in the case of Bitcoin, one of the miners, meaning that I'm one of those who approve and order the transactions. And in that sense, it's open. They allow everyone to join it. That's the mechanism it's built. In contrast to that, we, I guess, at IBM led that direction, but not only us, there are also others. We made the observation that, yes, technology is generic. It could be used also in the enterprise use cases, not for crypto. And most probably those use cases, we want a private permission network. So what does it mean? It means that several banks, let's say, come together. They want now to do digital bonds. They want to do digital something, some application. They don't want an open network. They want a private network, only for those half a dozen banks. Only they can run their transactions, and only they, or even a subset, are those who actually execute the network and approve the transaction and order them, and so on and so forth. The difference is in the fact that the governance, in this case, is well defined. You know exactly the entities that are doing transactions, they are identified, and you know exactly the entities that are governing the network. Meaning, if there is some problem, suddenly there is a bug in the system, you want to patch it and create a new version of the solution. The 6 banks, I'm sure, have some committee, some way to agree what's the process. They can do that, they fix it and redeploy a new version, like any other software. When you go to public permissionless networks, it's much more difficult, because it's the entire world. There could be thousands of miners, and you need to sort of get an agreement with everyone to make those changes. And it happened in the past. It happened with Ethereum at the very early phases. There was a problem. Up till these days, there are two versions of Ethereum. Essentially, there is the classic and the one that we know that's more publicly known. So the fact that this governance is a big issue to enterprises leads to this private permission network, okay? Tokenization, I think, was one more term that you asked about. We hear it a lot. At the end of the day, in the space of crypto and in the space of blockchain, we use this term to denote an abstraction of something of value, a digital asset, or it can represent also a physical asset that we want to do some transaction with, we want to trade, we want to maybe, it has to have some value, of course, and ownership. And maybe when I say do transaction, I can pass on ownership, I can put it in a market place, I can sell it, I can buy it, and so on and so forth. So it's a means to actually abstract something of value. It could be actual fiat currency in that case, of actual money. It could be IP, it could be a patent, it could be a house, it could be a car, it could be essentially anything of value. And by the way, the concept itself is not new. In other domains, other industries, like for instance, in the Internet of Things space, we use terms like digital twin. A digital twin is an abstraction of, could be a machine, an engine, an airplane. And in that cases, we had that representation primarily to do, I would say, simulation or some other activities on it. But the concepts are it's not that new. But that's really the essence of tokenization, right? And in the space of crypto, it really represents the cryptocurrencies.
Thanks so much for kind of giving us the, basic meaning of all these terms and kind of getting us all up to speed. Sometimes it can get confusing for a lot of people. So speaking of tokenization, I was looking into some of the work you were doing, and some of it was around tokenization of digital and financial assets. And you recently published a piece around central bank digital currencies. And so is that essentially, virtual currency that's crypto, or is that something else? Could you tell us what that is basically?
Yeah, so it's different than the crypto. So what happened today with sometimes it's the whole space is called DeFi, Decentralized Finance. These companies are highly unregulated, independent. They can create any cryptocurrency they want. Sometimes it's called stablecoin if they attach it to some value that is more stable, like certain currencies, or it could be just one currency. Or sometimes it's not attached to anything, and it's purely based on demand and supply, the value, I mean. And sometimes it's related to some work that you do as a miner and you get those cryptocurrencies, so it could be part of the system. So there are many of those. The central bank digital currency is a digital representation of existing cash that we have today. Most of us use less and less actual cash. We all do digital payments. We use our phones, our watches, and so on. Many of these transactions either happen by bank-to-bank transfer, it depends on the application, sometimes, or many, like Apple Pay, Google Pay, and so on, goes through our credit cards. But our experience is a digital experience one. And so you can think of that the central bank digital currency would be the digital representation behind these digital transactions that happen today on these applications. And because in a sense, we already replaced cash, almost none of us use cash, but this would be the equivalent of that. So in that sense, it is a stable coin. It's backed up by the government. So it's exactly the same value as the currency in that country. So if we do one in euro, like was an RFI just a few months ago, and there is an intent to put in place a retail digital currency to represent the euro, it will be exactly €1. And you could buy with it in any place you can buy today with cash. And you can pay with it, you can pass it between you and me, and do all the activities that you do. Only that it is more efficient because you don't need to print money. Printing money is expensive. And anyway, people don't like to use it anymore because they have these digital means, certainly in the developed countries. It's a bit more challenging in underdeveloped countries where not everyone has a smartphone. But there are solutions to overcome that as well. So that's really the central bank digital currency. Oftentimes there is a question, okay, so if that will happen, what's the role of the commercial banks we have today? Are we now just clients of the central bank? So I need to clarify here, there are two types of CBDC, of central bank digital currency. One is called retail. That's the one that we, the users, use. That is the one that replaces the cash. And it's between us and, I would say, primarily the commercial banks today. And then there is wholesale. Wholesale is all the transaction and settlement that happens among the banks, between the commercial banks and the central bank. That is already happening in digital form. Nobody's actually moving money there. So in that case, it's really a more formal digital representation of that process. In the case of end user consumers, it's actually replacing the cash. So there are these two kinds of CBDC that both of them are being promoted by many countries across the globe, by the central bank, by the government, putting in place the required legislation, policies, and many central banks are doing experimentations with the technology to see how to deploy it. Now, coming back to the question that oftentimes is asked, okay, so now if the central bank will put out this digital currency, what is the role of the commercial bank? Why do I need it? I mean, they put out the money, I can get it directly, they do the settlement. So again, there are multiple architectures that one could deploy such a central bank digital currency. But what we see is that most, if not all of the countries would go with the current model of having a two-tier architecture where the commercial banks remain responsible. So our accounts would remain with the commercial banks. They would do all the background check, the KYC, they will do all the AML, anti-money laundering checks, and so on and so forth. So our activities, it's not like the central banks want to take out of business the commercial banks and something like that. No, it will be the one who puts in place and puts the policies in the country. It will maybe do audit when there is some suspicious activities and so on. It will do the settlement, of course, but it will go all through the commercial banks.
Okay, that makes sense. And I personally didn't kind of make the difference between retail and commercial. And so I guess this question be more geared towards the retail part of CBDCs. Which countries are the furthest along in implementing this, and have any implemented it where a consumer could potentially conduct a transaction in this?
I think that the largest deployment worldwide is China. It's a centralized one with actually no privacy. They deployed and enforced retail CBDC, and they are expanding it. There are a few 100 million users already that are using it, and they've been using Alipay and WeChat as their applications, but they do a lot of these financial digital transactions for payment, for transacting, for so on, paying at merchandise and so on. And they are forcing them to move to the central bank digital currency. So I would say that China, again, not not something that will happen in a democratic country, because it's a centralized solution, top down, no privacy, so on. But it is a very, very big deployment. There are, I think, in Africa, Nigeria, as far as I remember, there are a few more small countries where it's actually, I would say, in production. Not extremely well successful, and it's still in the early phases at this point. But I think that the Western world is still experimenting and starting to move. I would say Europe is among the leading geos. Across Europe, it's many countries, all the EU that will move to central bank digital currency. There should be an RFP and start of development or implementation next year. This year the RFP, next year the implementation. So that seems to be very serious. But there are also other central banks that are very advanced. India also, and others.
Awesome. And so with CBDC and then even broader, like when you're talking about blockchain and other technologies, regulation is a big part of it. You know, folks that kind of participate in these technologies need to know what the rules are, what the boundaries are. And it seems like, you know, the United States has very minimal regulation and very little formal kind of rules compared to the EU, compared to even other places. And so that's just my impression. A, is that correct? And then B, what would you say, for example, let's take the EU as an example, exists when it comes to laws and regulations? Do they have like national laws around blockchain in particular, around you know, CBDCs in particular, or is it still more localized, kind of country by country, when it comes to these technologies?
Yeah, so I think you're correct that EU has been much more active and the countries there than the US. It's not like US has not done nothing. There were experimentations done. The US, the Fed has done some experimentation. Actually, we've met with them not long ago, and we had a very, very good discussion. So I know they're exploring, and there was an White House executive order a year ago with several meetings. We also participated there and gave input. And so I think they are still in the education and some experimentation phases. The EU indeed is advancing maybe faster, both from a regulation and policy makers, and they still need to pass on some laws in order to deploy this. But as I said, there was an RFI, a very big RFI with tens of questions, which was like a market exploration, and they've been talking to many technology companies. And many of the countries in the EU, primarily the big ones, are doing experimentations. But at the end, they will deploy a single retail CBDC across all of the European Union. So all the and also a single wholesale among the central banks and the EU central bank. So it will be a single system. Now, I think in each and every country, of course, there is the local policies, and of course, that can further refine. And I'm not familiar exactly on the relationship, but I'm sure the EU will come up with some policies and some regulations. For instance, how much digital euro you can hold, you as a EU citizen, okay? Things like that. But then there might be more refinement on that. Since it replaces cash, I mean, there is some legislation and regulation that needs to take place, but it's not like it's a whole new thing. And I think, by the way, I didn't mention it earlier because we've mentioned cryptocurrencies and the whole space of decentralized finance. One of the things that accelerated the adoption or the move to CBDC by the various governments is the fact that so many cryptocurrencies started and they were unregulated. And since they were unregulated, there were also fraud, and it caused, we saw people lose a lot of money, real money, not money they made in crypto, because they were promised stable coins, or they were promised that they, I don't know, they get certain return on their investment, and it didn't happen, and they lost many, many millions of dollars. So part of it is to cope with that and make this whole space more regulated. And I think this will also open up the opportunity for non-bank institute to join the marketplace and offer maybe services. Okay, and it should simplify that. I think that also over time, we'll see that some of these unregulated services we see today will adopt the new regulation that is advancing with the CBDC and will become regulated. And I think we'll see that movement. Again, it's a delicate thing also with regulation, because you don't want to also kill innovation. So there is good things that happen from the, it always sounds like it's like the cryptocurrency world is a bad thing because of the people that lost money and so on. But there is also a lot of innovation that's happening there. So we don't want to kill that. So we need a balanced way to start to add regulations, certainly for the CBDC, but for the bigger space, but keep and allow flexibility and openness to maintain the innovation. For instance, and there is room to do innovation. Like, for instance, just as an example, when we want to buy services abroad, these are still very costly transactions. If I want to pay for a hotel and transfer money to the hotel to his bank account, it can cost tens of dollars. And we know that with blockchain, and we've done multiple experiments, we can do it for, I don't know, a very small fraction of that from a cost, and also time, because reconciliation is very fast. So it's these innovations that need to happen, and we want to make sure that we remain with them and we don't lose these capabilities, because there is also good benefits that can happen.
Absolutely. Yeah, I was at a blockchain conference maybe a year and a half ago, and I remember someone was sitting on the panel and they were almost begging for, some rules or some level of regulation. I was like, man, that's surprising, because no one wants regulation. But the fact that, he was a founder of a company, was kind of asking for this, kind of shows how much work there has to be done, especially in the United States in particular. Kind of shifting to kind of blockchain on a broader level, and IBM, obviously you all do a lot of various implementations of blockchain in various sectors. And I was kind of looking through some of that work. And one of the things that caught my eye was Food Trust, which is basically a system that can, track foodborne illnesses and really kind of, let you know which products to take off the shelves, which restaurants they may have been distributed to, that kind of thing. How does blockchain help in that, make it quicker, more efficient, and obviously make it safer for the public?
Right. So yeah, for this kind of supply chain, we call them track and trace use cases. It provides really the provenance, in the sense that because the blockchain is so secure, and let's say you manufacture some cereals, I don't know, in a factory, and you sign the transaction that now you send these packages and they came from this origin on this date, whatever metadata you think should be on the ledger. And me now as the, I don't know, store owner, or me even as the consumer, can see all of that data and I can trust it. Okay, it's not that, I mean, this is signed, originating, coming from the manufacturer. So I know exactly when it was produced, from which farm it was, and everything. And if on the way it has multiple steps, or it's been moved from a manufacturing to a reseller, maybe it was in some other place and so on. All of that history is tracked and stored on the blockchain, on the ledger, and I can see exactly that. So I think that transparency also creates the trust that, let's say I'm an environmental and I care about ESG, and then, I can get all the provenance of really how much environmental impact this product had in order to reach my store. Or if I'm a vegetarian, I can get all the proofs I need that this is indeed a vegetarian dish. So blockchain provides all of that, but there is one but here. If there is on the way fraud, in the sense that let's take an example with medicines, with drugs. So I have the same provenance with drugs, but if somebody in one of the steps replaces the package, okay, with a fake one, and still submits the transaction, signs it, and so on, I don't know that it was replaced with a fake one. All right, that's where only blockchain solution will fail. There is a solution to that. One technology we also developed, it's called cryptocurrency, sorry, not cryptocurrency, crypto anchor. What it means, it comes from the fact that it's like a small anchor that you attach to the product. You can think of it like a smart RFID that has some small crypto capability to keep, let's say, a unique serial number that would prove that this is an authentic product. Okay, so when I get into my hands the medicine, I can scan that crypto. It's unbreakable, okay? And I can get validate against the manufacturer that it is indeed something he manufactured. And that crypto anchor, it's not something you can copy because it's cryptographically encrypted and there is no way you can do that. And there are multiple technologies to develop those crypto anchors, all the way from some special stickers that can change colors with temperature to really authenticate that it's the original and authentic product. And again, this is relevant to multiple products, okay? It could be for medicines where the damage, and again, these are real problems. Like in Africa, we know there is I don't know how many tens of % of medicine that are being replaced with fake ones. But it could be also something you attach to more expensive products, okay, to make sure that it is an original dress or original T-shirt and so on. So yes, the combination of these two can then bring you complete guarantee that you have the authentic product and exactly what was its life cycle. There are also other technologies, just to give one more example. So there are products like wine, olive oil, and so on. In that case, you may not need to know exactly that this originated from a certain factory, but you want to know that it is really the original olive oil and it was not mixed up with water or diluted with something else. So you can scan the content with the relatively simple sensor, even with a smartphone, and analyze the spectrum of the material and get assurance that indeed this is the olive oil you expected to have. And that could be good enough. So there are all these technologies that complement, I would say, the blockchain and can give you the guarantees.
Absolutely. Now, we're kind of moving back to the crypto anchor. Is that something that is currently something that's expensive to produce and implement, or is it fairly uncostly like blockchain transactions are as well?
So there are multiple companies out there who produce these. And I know there are companies who are able to produce them very cheaply, so that if you need to put it on a drug, then it's really 1-2 cents or something very, very cheap. I think part of the challenge now is that there are multiple companies and multiple ways to create these crypto anchors. So we actually developed a framework that can work against many of these and connect them to like a hub that can connect multiple of these and work with the supply chain or with a blockchain platform. And I think as time will pass, I think maybe we'll see more of consolidation around some major players and maybe some standardization also.
Makes sense. One other use case that I'd like to talk about is IBM's involvement with the Excelsior Pass, the COVID pass in the state of New York. And I remember, when people are getting vaccinated, this was like an international problem, fake vaccination cards and not knowing if someone's vaccinated or not. And New York State obviously used this Excelsior Pass system that would verify it using your smartphone. And I later learned that was a technology provided by IBM in some part. My question is, has that been used in other use cases? And, in that use case, I think it was a perfect example of, proving that you're the person you are, that you were vaccinated, and that you're entering, for example, this restaurant with other people that, hopefully will minimize your chance of getting sick. And so I thought it was like a very, small, perfect example use case of something where everyday people were using a blockchain technology without really knowing it, but were benefiting from it. So I was just curious if that had been implemented to other things in healthcare or non-healthcare.
Yes, yes. No, actually, we had in hand the technology before COVID, and we applied it to COVID. The technology or the idea behind it is, of course, much more general. It's in short, it's called self-sovereign identity. I mean, there are multiple identity systems, right? I mean, today, when you log into a website, it would ask you, do you want to log in with your Facebook, Google, Apple account, right? These are federated or centralized identity management systems. Of course, there is a drawback because if you use your Google account to log into a certain site, then you share that information with Google, the fact that you logged into that other site, and you might not want to do that all the time. The idea behind self-sovereign identity is that you, as the individual, are managing your identity. Now, identity in the very broad sense. It could be your, I don't know, financial status or financial transactions, could be your health records, your driving license, education credentials, health credentials, and so on and so forth. It could be anything. The idea behind or the way that self-sovereign identity works is that there are those who create certificates on your behalf to prove that, let's say, you graduated from MIT, electrical engineering. They'll create, I mean, today they give you a diploma that's printed on paper and you can show it to everyone, and people should believe if it is the authentic one or not. And of course, there is even their fraud. But now you get this credential, a digital encrypted piece of information that you as an individual hold in your wallet, okay, along maybe with also your digital money, by the way. And when you need, you can present it. And you can present it, you can present part of the information there depending on the situation. And they can validate, first of all, that it is authentic, that it is true and correct, and they can decrypt it with your public key and so on. But they also can go back and authentic or validate that whoever signed this credential was allowed to do so, and it is signed with a public key that's known. And if it is in the case of COVID, it was approved by the government. If it is in case of education, it's approved, it's an approved and known university, and so on. So there are several benefits here, I would say primarily around the fact that you manage your credentials and you manage it in a way that can preserve your privacy. Because not only you are in charge and you hold all the credentials, let's say on your phone or in your wallet, could be on the cloud, doesn't really matter. You decide with whom you want to share those, okay, when you're asked to. And we are actually working on the technology to allow you to very precisely share only the piece of information that's needed. Like even the simplest things. Let's say you go to a pub and somebody asks your age. In order to prove that you're at the correct age, the typical thing is they ask for your driving license to show that you are above 18 in Israel, 21 in the US, or whatever age. But essentially, you're disclosing your age, which is not needed because all you need to prove is that you're above a certain 18 or 21, a certain age. Two, there is all the details. I don't know, depends on the driving license and country, but there is your address and whatever. And in fact, with with credentials, with self-sovereign identity, you can actually provide him a proof that you're above 18 without disclosing even your age. And only that's what he needs to know. Okay, so again, very similar in other domains. If you need to prove your, I don't know, financial capability to get a loan, today, like in Israel, they would ask you bring a statement of your last 3 salaries and some testimony, some proof from your bank, and so on and so forth. Instead of creating the correct piece of information they actually need, about some credit capability, okay, that we can create. And in this case, we use technologies like zero-knowledge proofs to provide those proofs without disclosing the actual information. So that's really the power of self-sovereign identity. And to your question, it was a long answer, but it was before COVID. Healthcare is certainly a domain, but we are looking, I think, at governments. It's kind of the parallel to CBDC. Governments are looking to create digital decentralized identities for the citizens. It can start from managing the driving license. That is one of the, I would say, driving use cases to digitize that. But there is also interest to do that for the healthcare, also for the education, and I think so. I think that government will be the initial ones that need to push to drive this, and very similar, but maybe in a slower pace. It is happening, and governments are looking and experimenting with these technologies. So we'll see that happening, and then we'll see it also in the I would say in the private sector or companies who would deploy these kind of technologies for their employees.
Awesome. Yeah. When you're talking about all of that, I thought of, like here as a doctor, even if it's the same company, if you're working at a different hospital location, you have to apply for credentialing. So even if it's like 2 miles down, same company, you have to prove that you went to this medical school, this residency, this board exam, and fill out each one of those things, putting down phone numbers and contacts and whatnot. And it's like a 3-hour process. I'm like, man, if there was something where you could just verify that instantly, how nice would that be? So one day, hopefully.
So yes, there are actually, it touches on 2 things. One is really using these digital identities. It's much simpler with all the proofs because they don't need to go back. I mean, it's a transaction. They immediately authenticate that it was produced by the correct university and so on. That's one thing. And there is a similar use case that was in COVID also, where there is a long process to approve suppliers. So in COVID, it also happened that hospitals needed to buy much more equipment, masks, and whatever else. And they needed a quick and efficient process to approve new suppliers. And approving a supplier in these entities, certainly in healthcare, but not only in healthcare, even in IBM, even in any enterprise, it's a long process. It takes weeks, sometimes months. And one of the networks we create is called Trust Your Supplier. And what it means, the essence of that in a nutshell is that there are multiple companies in that network and they share a pool of suppliers. And if one supplier was already approved in the network, then there is no need for once it's done it once, it doesn't have to do it again and again for each and every company like it happens today. Okay, it shows the same credentials once, and once it does it, he is approved in the network and all the companies can trust him and they don't need, it's like a very simplified know your supplier process.
Yeah.
To simplify. Yes, so that's also a very successful network, and we had, I think at COVID time, we had a special one just for the healthcare.
Yeah, it seems like COVID, just like many other technologies like telehealth, for example, it really put on steroids how the implementation of blockchain and these technologies was more use cases to actual like, hey, we really need this. We need to kind of move this forward is the impression I get. Obviously, you've been involved in this space for a really, really long time, continue to be involved. You saw what happened in 2020, 2021 with the hype cycle, and then lots of the negative press afterwards. A lot of that press focused on things that, are not serious, for lack of a better term, apes costing $1 million now costing 50,000, or the SBF saga and some other things. Having gone through that 2 to 3 year period, having seen what was there before, where we're at now, where do you see the space is right now? Where did we gain anything from that at all? Or did we lose anything? Or, what is your view on kind of what we went through over the last few years?
Yeah. No, I think we're certainly, while painful, I think, because I really feel very badly for the people. I mean, sometimes people tell me, Gabi, what do you care? I mean, if they put their money in that risky cryptocurrency and that company fail, their problem. I'm saying it's not that, because all of these DeFi, or most of them, are seen from the simple citizen who doesn't understand the technology or financial institution like any other institution. And when somebody promises them that they'll get, I don't know, 18% every year for their investment, it sounds very promising. It looks like any other financial institute who gives out loans, and they trust that they'll get their money. And they don't understand blockchain, they don't understand cryptocurrency or stable coin or how the mechanisms work. So first of all, I feel very bad about those, and I think, or I fear that we did lose some people because of that. The good thing that happened is, as I said earlier, is one acceleration of CBDC and the fact that governments understand that they need to regulate this space. And as I said, we need to make sure that we regulate it, but carefully, not to kill it, not to kill the innovation. There are good and very interesting ideas there. I think people certainly learned, again, some, not all, because it's complex. So they learned the fact that, yes, these things can, like NFTs, there was this hype around them. Even if everything works fine, correct, so on and so forth, some people invested, I don't know, hundreds of thousands of dollars or millions of dollars to buy a certain NFT, which his value dropped because, again, there was no value behind it. It was just a hype. I think there people may have learned, but even there with the NFT, let's assume that it represents something of real value and you want to make an investment. There are also technologies that needs to evolve to provide you the correct guarantees, unrelated even to regulation, just to make sure. So, you've seen sometimes NFTs that are priced very high and the average user doesn't really understand. So because these are permissionless and public networks where these NFTs are traded, and there is no need to provide your identity. These are pseudo-anonymous. I mean, you can open as any number of wallets you want, and you can just simply, transact between yourself and increase the value of the NFT. And then somebody would believe that it's worthwhile, I don't know, $50 million. In fact, nobody paid for it more than, I don't know, the initial value of a few dollars maybe. So again, there is more, and these things can be, fixed with some regulation, okay, because you need to show the real value. There are other things like how to implement those NFTs. Sometimes people bought an NFT that was, let's say, a digital drawing, which is nice. Okay, I mean the artist painted something very nice, and you're willing to pay $1,000, a legitimate transaction. And by the way, one of the benefits with NFTs is that if you sell that artwork, there are some contracts in which the artist may get some small portion of that additional transaction, which is nice. He gets money for, but like the way it is implemented in many cases today is that in fact the NFT itself, like the drawing itself, is not put on the ledger because it's too big and it's too costly. And it's put on some website and only the link to it is put on the ledger. If that website goes away, you're left with the right to have that NFT and that drawing, but where is the drawing? It's gone. So these are, again, I think here again, some regulation with some technology to provide you as the citizen enough guarantees. So I gave you multiple examples of there is things that still needs to evolve to make it and to maintain it and improve it. But yeah, I think it's a lot of regulation that will organize these things.
Would you say, just last question, would you say you're optimistic for the next 5 years in general about the space and how it'll develop and how governments will act and how private corporations and everyone will kind of do their part to move it forward?
Absolutely, absolutely. From the beginning, I said that the observation was there is this generic technology that, again, we had the discipline in place, but the fact that it's like any middleware that's somewhat complex and you put good minds together and you build a platform and now it's easy to develop these applications. I think we'll see many other uses or multiple uses of the blockchain technology, certainly in private permission networks. Because it saves time and it's much easier to develop these applications. I think CBDC is very real. It's not hype. It's something that banks are putting out there, and we're engaged in multiple central banks. They are moving. It's a process. It takes, as you said, 3 to 5 years until we'll see some of those, but it is certainly happening. I think we'll see some regulation also taking and making a little bit more the order with all the DeFi, that space. And we'll see that hopefully we as citizens will get some innovation out of this space, cheaper transaction, as I gave you the cross-border payment as an example, or exchanges and all of these that are more efficient and faster and more open also to non-banked people. We didn't speak about that, but not everyone is banked, not everyone has an account. And we certainly, from an inclusion point of view, we can certainly do better and easier with these technologies, as well as with, as I said, in Africa, for instance, or other underdeveloped countries where they don't have smartphone, we can have solutions with smart cards that they come to points of sale and they can do transactions and they can participate in all of these. So I think there is a lot of good things, and we talked also about multiple other use cases that we use blockchain. So absolutely, and the more we'll put in regulation and organize this, I think people will start to understand and use those that are more regulated, more organized. And I'm sure there will be always those that are unregulated, and some people would want to take some risk, and it is okay. Some people go to casino to bet, it's fine. So we don't need to limit the freedom, but we need to clarify and help people to make sure they don't fall in those cases where they really are seeking for something more stable to invest their money in.
Absolutely. Well, hey, thanks so much for spending part of your day with us. I always love talking about these topics, especially in the non-healthcare and healthcare adjacent spaces. Just